Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, all of the CBAM portfolios underperformed their respective benchmarks, with returns ranging from minus 1.25% for CBAM 1 up to minus 0.98% for CBAM portfolio number 3. In what has been a relatively risk-off week, we've seen investors seeking safe haven by running to gold, and that would see 91 global gold miners up 1.84%, and then iShares physical gold up 0.92% on the week. We did see some recovery as well, despite the strong sell-off for Japanese equity, and I would see Fidelity Japan up 79 basis points. And then just there to note, in the mid-cap space for US equities, outperforming large-cap S&P 500 on the one-week basis. In terms of detractors from performance, we continue to see weakness from all three of our European positions, which have all been down more than 3.7% on the back of the simmering pot of tensions between Ukraine and Russia towards the east of Europe. That would see also some weakness just this week, equity giving away some of the gains on a one-week basis, alongside some weakness from FTSE 250, which is one of the overweights across the portfolios. On a year-to-date basis, again, all 10 of the CBAM portfolios are trailing benchmark, with returns ranging from CBAM 1 returning 3.78% down to CBAM 5 V2 returning minus 6.56%. In terms of detractors from performance, the story remains consistent here, that we continue to see the tensions in Eastern Europe between Ukraine and Russia really stressing out the European equity positions, both in large cap and small cap, through Bailey Gifford and ASI European smaller companies, both down more than 16.9% on the year-to-date basis. In terms of Japan, we continue to see attractive valuation points for Japanese equities versus other more developed markets, which would look relatively more expensive based on forward price earnings ratios. But then again, coming out of the pandemic, out of the developed markets, Japan has been the slowest out of the block, and that has seen that drag on GDP growth, that slow on GDP growth, seeing equities sold off 17.48% there for JP Morgan Japan, and also some headwinds for clean energy in a rising interest rate environment, which makes the future earnings for the technology behind clean energy more expensive in the short run, and scaring investors away to safer assets. We've seen some reversal in terms of contributors to performance. LNG UK 100, some strong performance there for the domestic UK FTSE 100, up 2.82%, and we continue to like the UK equity market from a valuation standpoint as well. And then we've seen some rush to safety, with some investors choosing to invest there in physical gold, and you'd see iShares physical gold up 0.05% on a year-to-date basis. And then another top performer being Legal & General Emerging Markets, down 0.31% on a year-to-date basis, largely driven by some recovery that we've seen in the Chinese equity markets, which were heavily sold off in 2021.